Hello everyone, welcome to Momentum Labs. I'm Shekhar, and today is day 90 of my momentum investment journey, building it in public. So this is a monthly review as we have completed the month of June. I'll be showing the monthly performance of my portfolio and also be discussing about the rebalance that I'm going to do since I do rebalance every 15 days, and today is the rebalance period. I'm going to pick a couple of stocks and exit two stocks. I'll be discussing those. And whatever I say, these are not any recommendations. These are purely for education and knowledge sharing purpose. I'm just building out or building this out in public so that others can also take this path of DIY investment. And coming to the other news, so there have been news lately of SEBI launching a new act or a proposal where they have barred influencers or financial influencers from disclosing or recommending any stocks and talking about portfolio performance. So what I understand from this is that it is solely for the registered entities and not for the unregistered influencers. So to be on the safer side, I'll be closely tracking those developments. And if at all there are any regulations that bar non-registered entities like us from discussing anything about stocks in public, then we'll refrain to do so. But you're not making any recommendations. This is purely our journey and sharing it with others. So if at all you are watching this and trying to emulate the same strategy, take it with a grain of salt and you are at your own risk. That's all from my side. Let's begin the monthly review. So overall, for the 90 days, I'm up by 7.7%. And if you come to this month, that is for the month of June, the performance has been pretty bad when you compare it with the index. The index has risen by 6.56%. The index that I'm referring to is Nifty 200, whereas my portfolio fell by minus 1.26%. Now, because of this, there is a difference of the alpha or the excess returns that I've gained over the index. It is now in negative territory. So the alpha is minus 1.33. So overall, the index has performed better than my strategy. So the index is at 109.09. If someone had invested 100 rupees on April 1st of 2024 in Nifty 200, their money would now have been at 109.09. Whereas if someone has followed my strategy, it would have been at 107.73, showing how difficult it is to beat the index. So it is a long journey. We'll have to believe in our strategy. And if you do a proper backtesting and see the results to yourself, you get the confidence that you can go ahead in the longer term. So these should not perturb us in the larger scheme of things. So let's see what has happened in this month. Firstly, as I mentioned, there was underperformance because the Nifty 200 did well and we stayed almost flat. There was a massive drawdown of 12.75% in my portfolio. This happened on the election results day. And it took the entire month just to recover and come back close to the normal levels. So the election results were announced on 4th of June. 3rd of June was on Monday. 4th of June was on Tuesday. So the 1st and 2nd of June were holiday, Saturday and Sunday. So the week started on a positive note. And from there on 3rd of June, because of the exit polls, on 4th June, Tuesday, when the results were announced, we fell by 12.75%. So the rest of all these days were just to come back. Whereas in the Nifty 200 case, there was a fall, but the fall was half of what we did. It was only at minus 6.79%. Since the drawdown was less, the path to recovery was quicker for Nifty 200, whereas it didn't happen in our case. Our stocks did not recover so quickly. They tried to recover, but since the fall was high, we only managed to escape through. Whereas on the other hand, with the Nifty 200, there are a lot of other stocks which were pulling up, and the Nifty 200 performed better than us both in returns as well as in drawdowns. Thereby, the ROMAD ratio or the risk to reward kind of ratio, this is poorer in our case, whereas it is 1, meaning equal risk to reward in the case of Nifty 200. On all parameters or on all counts, our performance was bad. Even in the case of the percentage of days where our portfolio bet the Nifty index, we have hardly beaten the index in this entire month. There are only a couple of days, maybe 3 days. So the percentage of days where we bet index was only 15%. Now the overall portfolio's XIRR is at 54.73. There is nothing much to look at this number. We are only 3 months. We need to take a look at this number when we cross 1 year or so. Overall, it's a bad month. Now let's see how it plays out in the month of July. If you look at the strategies performance, so as I mentioned, the alpha is at minus 136 basis points lesser than the index. That's one thing. The second thing is that on the stocks front, there are a couple of good stocks that are holding up well, like Siemens, Prestige, Dixon, Cummins India, and Vedanta Limited to a certain extent. And there are some, in fact, only one troublesome stock, which is Adani Power, which is almost close to get on the verge of getting exited. As we'll see that in the rebalance, that this is actually getting exited. Not because of it has come closer to the 20% away from the 52-week high, because of the rankings. It fell the top 30 rankings and it is now below 30 rankings. That's why it is getting exited. On this front, we see that most of our stocks, which we are holding in our portfolio, have been flat throughout this month. You can take a look at these charts also. On the chart wise, if you see in this entire month, first I'll show the markets, how they've performed in this month. Nifty is really good. It has picked up really well after the crash on 4th of June. It rallied, bounced back. And even if you see the last 1 week also, it had 4 solid candles, like 3 white nights, one above the other. And the Friday closing was a little bit bearish, but this is a proper solid uptrend on Nifty 50. Whereas if you see in the case of other indices like Nifty Junior, they have been consolidating at a lower lows level. So there is some kind of divergence between Nifty 50 and the remaining indices. So this is Nifty Next 50. You take a look at Mid Cap 50. Mid Cap 50 also is undergoing consolidation. So you see that there's a divergence between Nifty 50 and the rest of the market indices. Same is the case with micro cap. It is also consolidating at these levels. And that's the case with small cap also. It is consolidating at higher levels. So the market breadth, if you see, is not that great. It is only tilted towards the extreme or the large cap stocks in the top Nifty 50. In fact, some of within the Nifty 50, some heavy index weights like Reliance, they have been pulling up the overall index. That's the case of divergence. Maybe many people have noticed that while the markets are going up, most of our portfolios, or the ones who are having portfolios constructed with the different market caps, they might not see the same kind of growth as Nifty, because the last 1 week there has been a divergence between the large cap stocks and the small cap and mid cap stocks. So this doesn't mean anything negative, because it's just a normal phase of correction. There is a rotation that will happen between different stocks and different sectors. Now, this is a healthy pullback in Nifty Junior. Even in the case of mid cap also, it is a healthy consolidation. Before making a further up move, stocks needs to consolidate and bounce back for the next leg of up move. So I see nothing wrong. It is just a healthy correction and normal consolidation. The same is reflected in our stocks, because we are also holding the universe of Nifty 200, right? So that comprises of Nifty Next 50 and Nifty Mid Cap 100. So since the indices of Nifty Junior and Nifty Mid Cap 100 are consolidating, so most of our stocks are also consolidating. So we can take a look at the stocks one by one. This is Vedanta Limited. Vedanta Limited is consolidating, not at a flat or a linear level, but it's trying to make a pullback towards its key moving averages. And this trend line is critical to see whenever it breaks out from these levels. Prestige also is now resting at its 21 EMA. Dixon has moved well. It has consolidated and made a small up move, not big move in the last 1 week, but a small move. CG Power again is consolidating at the high levels. You see the levels where it is consolidating is from the higher highs that have been made during the election results. So since then the consolidation is happening. Same was the case with Vedanta Limited also, and not with Prestige. Prestige has moved quite well from the election results high. In fact, not much, by 4.5 or 6%. Dixon did move well from the election results day onwards. It moved up by 20%. CG Power stayed flat. RBNL also is flat. BEL is also flat. All these three stocks, RBNL, BEL, or these two are government PSU stocks. Adani Power is also consolidating and coming back towards its key moving average. HAL is the next stock that is also consolidating at its recent 52-week high that has been made during the election results season. Same is the case with BDL, again consolidating at those flat levels. M&M made a decent up move from the election results. Siemens also almost not almost, it has made some up move from the election results day onwards. It has moved by 5%. So you see that some of the stocks have made a small move. Only Dixon has made a significant move, and rest of the other stocks are just flat. Mazdog was a good pick. It did move quite a bit from the election results day to 25%. Cummins again stayed flat. Motherson Sumi also was a good stock, which moved considerably from the election results by 20%. So Cummins, Motherson Sumi, and Dixon, these three stocks made a good 20% of move. Some stocks like M&M, they've made a 5% move, and the remaining all were flat. If you see, there were a couple of exits that we did during the elections results because some of the stocks had hit 20%, like BDL, RVNL, etc. And again, we have picked them the same stocks because they showed a good ranking. They bounced back during 15th of June. So because of that, since we have to sell and again purchase them at a higher purchase price, we could not realize the gains that these stocks have made. In fact, we ended up purchasing them at a higher level and we sold them at a lower level. Now, this might seem as a counterintuitive exercise when we do this, but we are doing it as a part of our rule to eliminate any kind of risk. So we were lucky that these stocks bounced back. But what if they didn't bounce back? We would have been in a bigger drawdown or a soup. So our strategy is to ensure that we cut down our losers, and if they're again showing strength, we hold them or we purchase them back. Now, when we purchase them back, it doesn't mean that they immediately move. They'll take some time for them to consolidate and make the upper move. So that's what is happening right now. We have to be patient. We have picked the high momentum stocks, and they did undergo quite a bit of volatility. Now they're again getting their composure and at good consolidation levels, and we'll see what will happen in the coming month and take a call. So far that's it on the stocks front. So the stocks that are getting eliminated, I'll show. So I've run the query just now. So let's see what all stocks are there in top 30 and what are not there. So we see that two stocks are getting eliminated in this rebalance. One is Adani Power. We don't find Adani Power in top 30. And the second stock is ABB. So these two are getting exited. ABB, we do have some profit of 8K, whereas Adani Power, I'll be selling it at minus 33K loss, net loss of minus 25K on the portfolio that is already baked in because the unrealized profit already takes into consideration this loss. So what is happening essentially is we are moving this loss from unrealized P&L to realized P&L in the exits where we have all the exits, right? So when Adani Power comes in here in the exit stage, then the realized profit, which is now at minus 3194, might go to minus 28,194. So that's what will happen overall. And then obviously, if we are moving the loser from the unrealized profit, the unrealized profit amount will increase by the same percentage. So net, we are already factored in all this into our net profit scenario. This won't change. So the other two stocks that we're going to pick up will be based on the top two. So we already have Masdog, Motherson, Dixon, Prestige. So the next two stocks will be JSW, Energy, and Trend. So these two I'll be picking up, and rest all are already there in the top 30. That is it for this week. I'll update you guys again next week on the one for the first week of July's performance. Thank you. Have a nice day.